Thank you for checking out Fieldman, Rolapp Associates Municipal Market Update for the week of August 29th, 2024. This is our 55th posting, and it is September 4th, 2024. We have had technical glitch after technical glitch. This is our third try. If this works, you'll see us in September. If not, you'll see us in October, because we'll just move on to next month. But it's important to get a posting done in September because so much has happened. The last time I spoke with you, we had talked about an attempted assassination of a presidential candidate. Certainly a very big deal. But since then, we've also had a change in one of the presidential candidates. So very late in the game, we've had the top of the Democrat ticket change. And so that has certainly created a lot of news. For our purposes, I think what has created the most news, and I think is what's on all the news channels, I don't want to say 24/7, but quite a bit, it is the Fed's comments at Jackson Hole. So Powell said the time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and a balance of risks. So that last part, going back to data dependent, we've heard that quite a bit, but there's that shift where it seems that there's less concern about inflation and more concern about the labor market. And I think if you're listening to the news right now, you're hearing that September is somewhere between 25 and 50 basis point cut, and then we'll see where things take us from there. And the markets have reacted to that. You're going to see some of that today, and we'll start getting into some of the details now. Let's get to that first slide. So our first slide, as I told you, we crammed 3 different ideas onto one chart. I'll break it down. Green bars represent the Fed fund. They say increases now. Maybe next time I'm doing this, I'll have to factor that in and change it so it says decrease as well. But then that yellow line represents the aggregate changes in that Fed funds rate. And so you can see anytime you see a green bar, you see a stair step upward. And so that's what that represents. We might be seeing that go down next time I do this. Then that light blue line is a 10-year US Treasury. And one of the things I had talked about, one of the first times we showed you this chart, was that that blue line was somewhat tracking the yellow stair stepping line. And then as investors' expectations changed and they thought that there might be decreases over time and things like that, you saw it change a bit. But I want you to go to the far right. So go to that July-August timeframe. You see that dip down, and it generally seems to be at a very gradual pace, but be trending lower. That's likely investors anticipating some Fed fund decreases. And so we'll see what happens when we actually get one, if we do. So anyway, like I said, there's a lot baked in this chart. Typical finance person, start with a bunch of simple things, cram as much of it on the graph and make it complicated. But we do think that there's a story to be told by this graph, and we'll keep using it, especially if there's a decrease. We'll see what that looks like then. So this is a chart where we're showing you the US Treasury yield curve. And that bottom one, 1/3/2022, that's where I tell you everything changed. We went from talking about just transitory inflation and things like that to it's here, but that is a standard yield curve. Year 1 has a lower rate than year 2, 3, 5. You can see it just generally trending upward. Whereas that green line represents the most current Treasury yield curve, and you can see, or as of 8/29, and you can see there when we talk about inversion, you see where the 1 year has a higher interest rate than the 2 year. Now, when I recorded yesterday, I talked all about the yield curve possibly no longer being inverted somewhat in the near future. Now, I have not verified this, but about 10 minutes ago when I was driving in the office, I got one of those push notifications talking about how the yield curve is no longer inverted. So I don't know if there are certain points on the yield curve they're talking about or not, but clearly there seems to be, as the Fed talks about lowering the overnight rate, that might be pulling down some of those short-term rates where investors are saying, I'm going to lock in long-term yields and going out a little bit longer to make sure they can get that before rates decline. I'm going to talk a bit about this when I talk about the flows into the bond funds. Oops, sorry, I went the wrong direction on you. This is just one of my favorite charts to just show how things have changed over time. Remember, on this chart, it's a little confusing. So the data for the first of a month is actually looking at what happened the month before that. So for August 1, 2023, the change was from July of 2023, and that continues all the way down. So we haven't captured some of the positive momentum for the August of this year that we've talked a little bit about, but it hasn't changed that much. When I recorded this yesterday, or attempted to, that 3.62 August 1 was just somewhere in the high 3.5. So really had not changed too much. But look at June, July, and August. So that starts this May through July data. And you generally see a trend downward. Nothing too dramatic, but generally trending downward. And so certainly for our municipal issuers, that is a positive trend. This chart I've shown you since day one. So you have seen this one, that you're seeing this for the 55th time. And this, what it tries to capture is the range of interest rates going back to 2005. And that's what this blue bars show. Pretty significant range. That green line represents the MMD for each one of those maturities. And it's a AAA MMD, years 1 through 30, as of 8/29/2024. What I see in this graph, from looking at it 50 times in these recordings, plus every other day for other reasons, is that yellow line looks less inverted, or green, yellow, whatever that is. And the other thing that I'm noticing when I look at this chart, and which really supportive of that, is years 1 through 6, that line was higher up on those blue bars last time I remember doing this recording. So what's looking like happening is, even though the long-term yields are coming down, it looks like the short-term yields have come down even more. And so certainly another very positive thing for many of our issuers. Now, this next slide, we just show a bunch of graphs at you to try to give you some perspective of what's taken place. Volume was if you look at this chart to the far right top, volume is very similar from 22 to 23. I think 24 is going to beat that. There's a lot of activity being teed up for the end of the year, so that'll be interesting to see. But this chart, this page, it's lots of charts, is just trying to give you some perspective as you track this month over month. Now we got the I'm sorry. Before we get to the economic data, this is a chart I told you I'd talk a bit about, and because it's inflows, green is inflows, yellow is outflows into the funds, who are significant buyers of municipal bonds. You saw this whole trend of it going in, except for that sell everything rally, and then money flowing out, and then some blips along the way. It seems that you might be seeing money flowing into the bond funds, and I started asking myself, kind of, why is that? Is it one, stock markets at all-time highs or near all-time highs, and so investors are saying, let's take some of that money from the one that's at the top and invest it in bonds which have like an income stream? Or is it that investors say the rates are going down, and when rates go down, the bonds that are outstanding with higher interest rates, price goes up? So it'll be interesting to see if this has a long-term trend, and there's no sell-off on it. Then maybe investors just want that safety of yield, or maybe they're trying to capture some of that capital gain by rates going down, which then make the bonds that are currently held out there a higher price because their yields are a little bit higher, and maybe investors are trying to capture that. So something to watch. Hopefully there's a continuing trend for money going into bond funds. One last thing on this. So the other thing is, both presidential candidates have a lot of tax bills and ideas out there. It could also be that investors believe that taxes are going up, and it'd be good to invest in municipal bonds. So all those things are probably getting factored into that, and there's probably other things as well. Those are just some things that came to my mind as I was thinking about some of the flows into funds and the information I have in front of me. Now, this next chart, okay, so money coming in, that's demand. Then what about supply? Are there bonds for them? And the answer is yes, certainly. There's a lot of bonds out there. Those lines, those horizontal lines, represent some historical averages. Those bar charts represent some weekly volume. And you can see, other than the week of July 29th, we're busting through those. And I think you're going to see more of that. From what I see in front of me, there's a lot of volume coming. And so the question will be, can the demand support the supply? And can we continue to see rates trending lower? We'll see the rest of the year here. Economic data coming up. Just want to make sure you have that available to you. We're doing this after, we're kind of halfway through this. We're recording this after this Labor Day holiday. Okay, haven't shown you this one in a while because it just really didn't seem that interesting, and I've been deleting it just before I record it. But I did do that this time because there's something that caught my eye. So that August dip in rates where the stock market sold off for a day or two and then money flowed back in. Then look at the 30-year, 20-year, and 10-year. So all with that like bright green line. They had their dip. They came back up about halfway of what the dip was. But check out that 5-year. I talked about that line where it looks like the yield curve is less inverted. I talked about how the front end, years 1 through 6, seem like they've come down on that chart. And what's happened is they came down and didn't go back up like some of the others. So while I haven't used this chart very often to illustrate anything to you, because it really hasn't had a story to tell, I'm going to show this to you in October as well, and we'll see if this trend continues. But that's our last slide. What we show next is just our registered municipal advisors. I encourage you to reach out to any one of these individuals. Also encourage you to reach out to myself. One last thing is, if you have comments or things that you want to see on our MMU, send them our way. We have incorporated every comment we've received, and so hopefully that's increased the value to those who view it. Thank you for your time and look forward to talking with you in October.